Just Ajay, it's just been a tumultuous kind of a market. Nobody expected US market to bounce back the way it did. Nobody expected Indian markets to correct the way it has. Where are we headed? This entire grind will continue. Do you think we are in for a long winter?
Oh, no, not at all. Not at all. I think let's be honest, at the end of the day, when the market goes up, the whole world says it will keep going up. When it starts to go down, the theory is everyone says, you know what, underperformance continues, we will do badly, and so on. I think, we got caught, and I think it is strange that people never thought that September would be a bad month in the economic cycle of India, given the elections were just finished, and the consumption cycle would change from October because that's the festive season is. I think it'll reverse itself. You will find earning surprises for this quarter. So whoever has been in the wallet of pessimism, I think will pay the price very soon when they realize that October onwards has been a pretty good, and November, all the indicators that we see from the market are very, very good indicators. So there is a complete reversal on the ground. And as always, financial analysts will be caught later after the results are out that there is a reversal of consumption pattern. There is an effect of the wedding season and the festive season, and that will show up in the quarter. So no, yes, valuations can go up and down. I'm not arguing that is the right price for right stock, but the fact remains: is the situation so bad that we are in economically? I guess so. The worst is behind us. September is behind us, and we will see progressively. You will see better numbers coming out of the indicators in this quarter.
When you say the signals which you look at and your team looks at, what are those signals which are convincing you that it's going to be not a long winter, it's going to be a good December?
See, grounds level, what we look at is retail sales across spectrum. It's just not two-wheelers, it's apparel, it's two-wheelers, it's housing, it's appliances, you name it. Of course, the Delhi situation, which is there, which is pretty bad at this point of time, is going to affect the North Indian consumption pattern maybe substantially, but will that be so? I hope somebody is listening out there and doing something about our breathlessness, in which case all our money makes no sense to us. But if you look at all the indicators, the shopping, the consumptions, the market purchase of durables, all are showing an uptick in the month of October and continues to be in the month of November. So on the basis, the fact that if there is a broad-based surge in consumption, which was not expected to happen, you would tend to believe that economic indicators will go up. And I'm talking a very ground level up, not a very sophisticated way. It's a very, Kriana called the Jart way of knowing what the market is doing.
Uh, Ajay, so when you say that consumption is looking up, then what should one look at? Autos, durable, FMCG? Because we don't know which way capex is moving, right? That we can't judge. That we'll only figure out in January, February. We can pick out from high frequency data point, GST, alcohol sales, movie footfalls, apparel sales. Those are looking up at. I agree with you because that's what we also understand. So time to back consumption, discretionary spends.
See, as I said to you, that the fundamentals are going into the economy is that when you buy anything, obviously the ingredients go in it. FMCG is still a no-go territory, and I think for the simple reason that there's too much of competition in the segment at this point of time. And number two is the newer entrants are coming and playing a bigger game out there. Private labels are coming in. So the so-called entrenched MNCs, I think will have a very, very troubled time, irrespective where the market moves. And that's the beauty of the market, that somebody else is coming and picking up your cheese in the market share. So market may go up, but those companies will not benefit. Is the old FMCG, MNC world. I think what will benefit? Two-wheelers are going to do definitely very well. I think you have perhaps said, I'm not seeing valuation again, but the point is they have overcorrected to the point where extreme pessimism lies. Two-wheelers will do well. Appliances, I don't see a reason why they will not do well. Requirement of, let's say, if you look at North, requirements of air conditioning and requirement of anti-pollution and requirement of heaters put together, it's a significant bump up in the economy. I think that will go up. So appliances, we are very clear. Hotels, we are very clear. Aviation, we are very clear, is definitely on an uptick in this quarter. There is no doubt about it compared to all analysts. So three segments: appliances, hotels, aviation, will directly affect consumption. I'm not sure capex companies are going to see a major uplift for the simple reason that government spending has to kick in, and I think that's where the bigger problem is. Government is not spending money for rightly reasons, that fiscal deficit, etc., etc. But I think capex companies will have a little more longer winter than the consumer companies.
Interesting. Ajay, when we were last chatting with you, you were talking about how new IPOs, consumer tech companies, startups, all of them are looking very interesting. From the last month to now, we've had some slew of IPOs and some heavy duty ones as well. Quite intrigued to know whether you were a subscriber in any or bought them on the first day.
I was not subscriber to any IPO in the last 30 days or 60 days to be fairly pointed. And I think it's amazing. Someone needs to answer. The dumbest deal went through in this country and all the mutual fund managers took it. What's wrong with you guys that you're buying a car company share which has taken now dividends, which is taking 28,000 crore from this country, and that's equal to what? It's 15 years of profit. It's taken it out and it's all gone out of the country and you are still buying the share. I think if the award goes, there should be an award issued by you guys. The dumbest deal by investment managers is buying that IPO. That's ridiculous. Total market capitalization of the company is 6,000 crore fixed assets. We're giving them a valuation of 1.5 lakh crores. Something is wrong with us, and mutual fund managers subscribe to it. So as always happens, it's nothing new. They're not gods. They ride the market. We all think as analysts that we done a great job of selecting the shares and buying it. But guys, be real. It's a market which gave you the return, and market is telling you how dumb we can be when we buy IPO like that. So yes, IPO, I think it's a slow train. It's been a greedy season for the investment bankers. No reason to buy any of the IPOs literally at this point of time. Maybe a renewable company was good enough, but apart from that, stay away. We'll find these shares much cheaper next year. So I hope greed season is down and realism comes in. But this was a really funny deal, which a smart investment banker and mutual fund manager subscribed. Somebody should ask them, why did you do it?
We sure have been, Ajay. But tell me, have you been a buyer anywhere in the market in the recent decline, the last month or so?
Oh yes, oh yes. So we have bought. Okay, as I said to you, we bought hotels. Definitely, we bought hotels. We bought consumer durables. We started buying the two-wheelers again. We were out of it, but we're back into it again at this point of time. We are buying very select mid caps. Some of the mid caps have done phenomenally well in spite of what you see in the market for reasons of regulatory. I can't name them, but if you just, it's very simple for investors. If a company has done extremely well in this quarter, I think you are backing a good bet. Not many have done, so the universe is not big. But whatever, and there are a whole host of companies, let me tell you, who's done well. I think they need to be there. Capital market story continues. All the companies associated with capital market have done quite well and have a long runway on it. One, so no reason we bought into them again. We're adding up the portfolios there. So I think by and large, if you look at it, this has been a good season of correction. It's hurt us somewhere also on our futures side. It's hurt us, but on the cash side, it's been a good story. Of a lot of stocks have been resilient. They haven't gone down, and therefore, the overriding pessimism is only because of NSE. Now, NSE is your grandfather's stocks, so don't bother with NSE. Maybe one or two qualify to your portfolio. Don't even waste your time with NSE stocks. They are the past. They're relics of the past. You need to look at the future. Future doesn't lie in NSE. So don't get pessimistic looking at NSE. Forget NSE. It's not for you. If you're a youngster, forget NSE stocks. They're grandfathers. Let him go buy it.
But why, I was reading some reports over the weekend that what's happened to the stock. But isn't it a good time to, let's say, revisit NSE? Because ultimately, yes, whatever will happen with this FNO changes, that could be made up by the new FNO stocks which are there. And ultimately, NSE is monopoly.
Well, okay. The answer is it's done reasonably well given the churn in the portfolios. But as we sit today in a situation, our big bellwethers, they are the biggest underperformers, and no reason to see that they will do anything different. When you look at HDFC Bank, biggest underperformer. When you look at Reliance, biggest underperformer. And do we see a future for them to exceed a lot of other players in the market? Answer is no. Maybe there's an odd trend which got added, which is doing well or whatever it is. But by and large, if you look at Grasim, you look at this thing, look at the weightages in the NSE and look at the features of this company. These managements are sitting on huge stock options in most cases. They don't care a damn about what happens to share price now. Most stock options are being given at a price of 10 rupees in most NSE companies by and large. So, so you're assured guaranteed money in the company for all the employees are concerned. It's not linked to this thing. So, so when you look at their future, their management, their hunger, the ability to compete in the market, you get back very dispirited and says, God, is this really companies I want to put my money around it? As I said, maybe the play is the index, and that also equal weighted index. Do not go for a normal index, if I would recommend, because they would give you weightage to perhaps most shares in them for you, for your sake. But pure index play, I think it's going to be a dangerous play because these companies are going to underperform rest of the market quite deeply in the next 12 months.
Right. Sajay, where is it that you're eloping to escape the Delhi AQI, or are you staying put? Are the
I
markets making you do that?
Nobody making me do that except my customers, and I wish I could escape. The wedding season, unfortunately, is a problem here because
Yeah.
if you don't show up your face, you know how North is. It's like you missed my wedding, all right. But I think I wish I could just leave just morning, go to the airport, and get off from the city. It's nightmare, and you know what? It hurts me that we pay so much taxes, and we have a minister in Delhi resigning on a day like this when Delhi is grappling for things. Come on, guys, how much selfish can you become to worry about yourself versus the people of Delhi? I do not know. It's not on the headlines. You guys don't know about what's happening here, but it is terrible. So I don't know if I make money also whether I live long enough to use it.
Oh, that sounds painful when you put it like that. But yeah, we're well aware of how bad it is, and people have been complaining about burning eyes. The AQI is really, really horrible, and now it's affecting the visibility as well and normal life. But take care, Ajay. We'll chat soon.
Thank you very much. You have a good day.
You too. I will move on and.
If you like this video, then like, share and subscribe to ET Now.